Show of hands, how many people follow Naval on Twitter? I'm curious. Okay, so, oh, can we get the mic on?
Hello? I was about to delete my account, but I guess I'll hold on.
So about 80%. So I think this is like a hardcore crypto audience, so we're not gonna ask too many kind of surface level questions and try to kind of dive deep on crypto stuff. But I guess the first question I have is, how much time are you spending on crypto related stuff versus non-crypto related stuff these days?
Mindshare or physical? Yeah, I think mindshare, when, like most people, when you first figure out what crypto really means, it's sort of an infinite rabbit hole. You can spend a lot of time on it. So I would say mindshare is probably about 60 to 80%, but obviously I'm still involved very much in classic tech investing, investments I've made, AngelList, and so forth.
So there's been a lot of craziness this year, right? I think even kind of the biggest bull in the room is probably surprised with how quickly things have moved. What surprised you most about kind of crypto in 2017?
Well, I think everyone's been surprised by the price appreciation. The actual technical innovation in the space, there's been quite a bit of that, but it certainly hasn't been the 15x, 20x that the prices have gone up. So to some extent, the market is catching up and possibly even exceeding the current realization of the technology. It seems to be going mainstream in the magazine cover sense faster than I would have expected. Like, there are now endowments and larger institutions that are seriously looking at it. There are people solving a lot of the finance and custody problems. It's probably fallen a little short on the tech development. I think we're still facing some very fundamental technical issues in scaling blockchains. We haven't seen a lot of real high quality applications out of purely financial and speculative ones. And so to see the money use case, the store of value use case, the story around digital gold or replacing financial assets get so far so quickly, I think that's been a shock to everybody. In a sense, it's good news. It's the nature of these things that when you have new technology, you need to have something that resembles froth or a bubble or hype to sort of bring in the capital and bring in entrepreneurs who are then going to deploy actual brain power against it. But it may take 5 or 10 years before many of these problems get solved. So that disconnect, I think, is surprising to anybody who's paying attention. So sorry to give the same answer that I think everybody in the crowd would give, but I think that's the right one.
Are there any particular kind of catalysts in the past year or so that you think has made the crypto story more relatable to people, whether it's the 2016 presidential election or anything like that?
Yeah, there's the old Mark Twain line, like, there's nothing so damaging to one's sense of self-being as watching a friend get rich. So I think that's been happening a lot. A lot of people have been watching their friends get rich, and I think that just sort of creates a frenzy and pulls people into it. I don't think the presidential election necessarily has a lot to do with it directly, other than to the extent that we're in a very deregulatory environment. The current administration, they put out an executive order in the first 100 days, and regardless of what you think of them, the executive order basically said to executive branch agencies, for every 2 regulations you introduce or enforce in kind of a new way or interpret in a new way, for each one you have to remove 2. So I think that's been very beneficial for crypto. A lot of people are wondering why the SEC crackdown on ICOs has been fairly limited to date. And I think at least crypto is getting its little a grace period, sort of like the internet did in the early days, where it was relatively regulation-free, and still is. But that regulation-free grace period is really important for any new technology to develop. At least in the United States, crypto is getting it, whereas if you look in places like China, right, it's like very whiplash. One moment is free for all, and the next moment all the exchanges are shut down and people are told they can't trade anymore. So I think that part of it is good. But frankly, what's attracting the general interest is just the opportunity to make money. I don't think most people are thinking about this as, wow, it's the next generation of internet protocols, or hey, we have a way to achieve consensus among humans that doesn't require a central controlling party. Or hey, this is a new way to organize the networks of the future that are more peer-to-peer based, or here's a way to create digital scarcity and transmit value securely over the internet. All of those are incredibly innovative, very fundamental things, but that's not why most people are in it right now. But that's okay. I mean, most people aren't into money because they like the theory of capitalism and they like the free exchange and they like how, you know, specialization of labor and all of that. People are into it because it lets them get the things that they want. James Altucher had a great quote where he said, you know, money won't solve all your problems, but it'll solve all your money problems. So I think people are just looking to solve their money problems, and a lot of people have money problems. And you look at crypto, and when we're in an environment where savings accounts are returning nothing, treasury bills and bonds are returning nothing. The Federal Reserve has been, all the central banks of the world have been in a grand money printing experiment, which is basically destroying savers around the world, and all the money is rushing into assets, and the higher risk the asset, the more it inflates. And crypto is a very, very high risk asset that can basically take in unlimited amounts of money because there's no price to earnings ratio underneath. There's no fundamentals to get disconnected from. It started disconnected from fundamentals on day one. So as an asset class, it can absorb almost infinite speculative money. And when the central banks of the world are have undertaken policies that are trying to turn the world into a riskier place, they may end up turning into a giant casino. And I think tech stocks and to an even greater extent crypto are beneficiaries of that.
So we're in some type of bubble. No one knows if it's crashing tomorrow or it's going to continue going straight up. And do you have a view on where we are in the cycle?
Well, there's an old line which I'm sorry to overuse, but it goes something like, money is the bubble that never pops, right? Like if we all agree upon a certain thing to be money and we all collectively buy into that story, it's a consensus hallucination. If we all believe it strongly enough, that new thing becomes money. So in that sense, it could be a bubble that could go on for a long time, or could go on forever, or could certainly inflate beyond any rational underlying assessment you may have of it. But every bubble that pops along the way, that's the tulip bubble, that's the South Seas bubble, so you have to be super careful. So I don't know where we are in the bubble. I don't even know if it is a bubble, and I would be hesitant to call it as such because that implies that it's going to pop. We all know people who have been waiting to buy Bitcoin this year, and they're waiting for it to go down in price. And some people go on Twitter and they famously rant about how they sold all their Bitcoin, and then they look like fools because a month later it's at 3 times the price. So this is the kind of asset class where it can run up 10x, and then the pop might be 50%, but given where you were waiting to enter, it's still up 5x from there. So you can't time these things. I think one just has to have a very long-term viewpoint on it. It definitely is frothy, but if you look at the history of crypto, I think every 2 to 3 years, it's gone up about 5 to 10x. So waiting can be very expensive. On the other hand, if there are still things that could go catastrophically wrong, that could drive the whole space to zero. So if you have more than 1 or 2% of your net worth in it, you're kind of a fool. Bitcoin, for example, the whole point there is that it's a decentralized store of value. Well, the decentralization may turn out not to be true. The mining is heavily centralized. It's arguable that even today, the majority of the mining operations are controlled by one very small set of oligopolistic operators in China, who are essentially in the jurisdiction of the Chinese government and may actually be one entity underneath. And even if that problem were to be solved, it may just turn out that the proof of work function underlying Bitcoin inherently forces centralization, because you're basically running data centers to do mining underneath, and data center operations are inherently get economies of scale and efficiencies of scale by being packed closely together, clustered together. So it may just be that the proof of work system may be inherently centralizing, just like the American voting system was supposed to be democracy and sort of free-for-all, but it turned out that it turned into a two-party system. Because the first place winner gets all the results, gets all the spoils, so the second and third place parties always have an incentive to combine. So Bitcoin may end up very much like that, in which case it's not very centralized as a store of value. Bitcoin is also a bet that the initial parameters of the network on how to create decentralized money were roughly correct, because they're not changing, right? That's become very clear in the recent debates, that changes are going to be very, very few and very contentious. And just aren't going to happen because they're concerned about storing value. But if we got the parameters wrong on the first try, or if there's a much better set of parameters, that's not going to happen with Bitcoin. So I think there's still an enormous amount of risk from here. There's still a lot of risk that a given currency goes to zero or close to it. That said, I don't think the whole crypto economic revolution is going away. The idea that we're now going to have digital consensus networks without trusted third parties in the center who are controlling things. That idea is too powerful. It's not going away. Thanks to the recent market run-up, there's now an enormous number of very bright people who are going into protocol development instead of app development. Protocol development now is very, very well funded, whereas historically with the internet, protocol development wasn't funded at all. It was done at the backs of a few volunteers, and it was really app development that was funded because the returns went to the apps. So now there's an opportunity for people to engage in high quality protocol development, and I think we're just seeing incredible innovation in protocol development, which is good for those of us who want to see a decentralized internet. I don't think we traded CNN and Time Warner and New York Times as our information overlords for Google and Twitter and Facebook as our information overlords. That wasn't the deal. The internet was supposed to be decentralized, supposed to be more of a peer network. So I think we're now going to see peer-to-peer networks in places that before were unimaginable, and that's going to create kind of this giant distributed scalable grid of the internet, which is, I think, the real internet that many of us were hoping for.
So I want to talk a little bit about kind of like investing. And you've obviously been a successful angel investor, and you're spending more time on the investing side looking at new projects. How do you think about kind of evaluating new projects, and particularly how does that compare to 5 years ago when you were focused only on kind of angel investing?
Yeah, so to be clear, I actually don't consider myself qualified to invest in crypto. It's way too technically complicated. So I actually work with partners of mine who are more technically sophisticated and actually read the source code and audit it and really understand the underlying protocols. So the disclaimer here is that my personal investing tends to go through funds like Polychain and Metastable, or I'm looking at the new index fund that Bitwise is launching, for example. Disclaimer, I'm an investor there. So I want to be a little careful. I don't want to give anybody investment advice, nor do I want to imply that I actually know something that they don't, because I think the deeper you get into this, the more you realize how fundamentally ignorant most of us are. The set of people who are qualified to invest in this space is probably like less than 1% of the size of all the venture capitalists out there today. It's a deeply, deeply technical space. It might be like the chip investors were back when venture investing was starting out in the 1970s or 1980s. So it's a very, very specialized discipline. That said, I think the most interesting use cases these days are mostly what I would call the money tokens. The ones that are either trying to be a store of value, like Bitcoin, or a medium of exchange, like a Zcash or a Monero, where they have fungibility and privacy, so they're trying to be used for transactions, or they're trying to be a unit of account, like the stable coins like Basecoin and MakerDAI and so on. I think those are somewhat interesting. I think the ones that are trying to power financial contracts, such as Ethereum and Tezos and kind of that whole chain, are interesting. So overall, I think at least in the near term, we're going to see a lot more of the financial and money use cases realized, partially because that's technically an easier use case. Like keeping track of a ledger and accounting is simpler than trying to figure out how to power entire new networks for bandwidth or solar power or those kinds of things. I think utility tokens have a little further to go. They're also just more lucrative, frankly. Like if you can redefine what money is, that's $1 trillion outcome, as opposed to you build a better Airbnb or Uber, and maybe that's $100 billion outcome. So those are the ones. So I tend to invest in funds that then tend to go out and look for the money tokens, is sort of how I would put it. I also do meet with a lot of very early stage companies with brilliant scientists coming out of good universities who are working on these things, and it's intellectually fascinating. You just learn so much about what's possible here. Again, the money is pulling people in. It's a signal, when prices are high, it is a signal to suppliers to enter the market. So in this case, it's a signal to entrepreneurs to enter the market. And there are brilliant people now who are trying to solve new problems using blockchains. The bad news is that 95% of it is not problems that should be solved using blockchains. So 2018, we're probably going to see a lot of VC-backed companies that shouldn't be using blockchains, who in 2016 didn't know anything about it, in 2017 have been busy really retooling themselves to be a blockchain-based company. And in 2018, they're going to try and raise money and fall flat on their face because not everything needs to be decentralized. Decentralization is very expensive. It's very inefficient. You're essentially trading off computational scalability for social scalability. Social scalability is only important when you don't want to trust third parties, but a lot of these companies are actually running as a central actor, where it's their company, they're making all the decisions, but now they've inserted a decentralized token in the middle, which isn't really decentralized, it's just horrifically inefficient. And they're using that because they hope they can raise money. And going back to the bubble thing, I think one indicator that we are in a very frothy and maybe bubbly environment is there are a lot of tokens that are trading at very high values that are junk. Right? If we had sort of the equivalents of the Amazons and the Googles out there trading at very high valuations, and they could be trading at $1 trillion valuations, but as long as they were the really good ones, then I think there would be less cost to say there's a bubble. But when you have the kind of market where maybe the market goes up 10% in a day, and all of them go up 10%, including the really junky ones, or maybe the junky ones go up 20 or 30 or 40%, that's when you know we're in a very frothy environment. So I think right now, at least, the market isn't distinguishing quality. Now, of course, quality is relative. Everyone has a different definition of quality, but I think there are things out there that are like quite clearly Ponzi schemes and are even labeled as such on various websites that show the market cap trackers, but they tend to go up all the same.
Kind of related to that, one of the things this year that surprised me most is, the total market value for digital assets last year was 20 billion. And this year we've got two forks of Bitcoin, Bitcoin Cash and Bitcoin Gold, that now have an aggregate value of over 30 billion. What do you make of that?
Yeah, so the whole fork thing is really interesting. It's kind of nuanced. I can't just get up here and say fork's good or fork's bad. That's too simple and doesn't explain it. So let me make the argument for where forks are good and where forks are bad and where forks haven't even been tested yet. So an example of where forks are good, if you're thinking about a classic company, like if you're Google, and you need to figure out, for example, is Google going to go into mobile phones or not? Or is Google going to go into ride sharing or not? Google has to make that decision, and then Google has to put resources behind it. And whatever fork in the road, metaphorically speaking, that Google does not take, Google's shareholders don't benefit or lose from that fork. So Google moves to the probability space of outcomes, making choices. Whereas in a cryptocurrency space, you could say, hey, figuring out a digital gold is a really hard problem. And in most universes, Bitcoin's not going to succeed. So if we just go and we just figure out one path and we try that, it's probably not going to work. So what the fork does is the fork allows the cryptocurrency, because it's open source, to pursue multiple paths simultaneously. And because it's pursuing multiple paths in the probability space, the odds that at least one of them will work are higher, and therefore the combined value of the fork should be higher than just the value of Bitcoin by itself. So that's the pro case for forks. The anti-case, of course, is that along the way you split the community, you create confusion, especially if there's naming confusion. So it's really important that these forks have clear and distinguishable names that aren't tricking newbies into thinking, oh, that's Bitcoin. And that they're also doing fundamentally, technically interesting things. They aren't just marginally, slightly different forks. They're actually very big existential risks. At the end of the day, cryptocurrency is really community. So it should have a certain amount of the community behind it. And the problem is that because these things can trade on one or two exchanges, they can be very heavily gamed. You have no fee exchanges where people are trading with themselves. They can actually trick newcomers into believing that they have a community when they don't. It's really easy to create a Reddit group with sock puppets who are pumping a coin, for example. So that's the kind of the case against forks. So I think, if you look at the Bitcoin Cash versus Bitcoin argument, that seemed like a legit argument between the miners and the developers. And you could see that there are different people on both sides. And yes, the majority are the classic Bitcoin, and it's a significant vocal minority with Bitcoin Cash. But when you start getting to things like Bitcoin Gold, it just seems opportunistic, right? Now, because I'm sure now we're going to see Bitcoin Silver, Bitcoin Diamond.
Bitcoin Diamond already.
Bitcoin Platinum, Bitcoin everything, right? At some point, you have to say, no, there's one thing called Bitcoin. You want to make anything else, go give it its own name. And hopefully it has technical merit. Hopefully it'll have its own community. let it compete in the marketplace of ideas, but stop trying to steal the name, and create confusion, frankly, which will then cause regulatory action or losses or opportunity for fraud. And I think this is where the exchanges can play a role. The exchanges can actually make sure that the names aren't done in such a way that is confusing the customers. And then, on the fork side, I don't think we've seen everything yet. So far, the vast majority of forks have been fork the code but keep the ledger intact. So the big beneficiaries here have been the current Bitcoin holders. Like if you're one of the early people who got into Bitcoin and you're sitting on tons of coin, the Winklevoss and the Roger Ver's and the Satoshis of the world, you're doing really well here. On the other hand, I could see someone coming along and saying, okay, thanks for helping us work out which is the correct protocol to run. That's the Bitcoin protocol, we agree with that. But we're gonna have a one-time reworking of the ledger. So it's a much fairer, however you want to define that distribution. Maybe the governments of the world get together and give everybody, each citizen, their share based on their producing a passport one time. We redistribute the entire ledger, but we keep the code the same. It's a one-time event, then we carry on. And now all of a sudden, this new Bitcoin, call it Faircoin, is being accepted, you have 7 billion holders, or maybe 3 billion, whoever can produce a passport and is a participating country. Now, how's Faircoin going to do against Bitcoin? As a community, it's larger. Maybe it's enforced by the government when Bitcoin is not. So I think you're going to start seeing private attempts to do that, where you're going to have airdrops that are going to be aimed at influencers, airdrops that are going to be aimed at developers, airdrops that will be aimed at kind of the general population. So this forking of the ledger and preserving the code is, I think, the path that hasn't really been fully tried yet.
Cool. Well, unfortunately, we're getting low on time. I do want to see if anyone has any questions. Maybe we have time for 2 questions for Naval. Right here?
Runners here that are going to take next. I'm going to stay here so we can do it.
So, I have a question about, for those of us who are kind of high up, those of us who are, ignorant about the space, don't know much about it, if we lose Bitcoin, is there any way to find them?
No, it's a bearer asset, no recourse, gone, goodbye, good luck. That's why, by the way, I think the biggest problem in this space that is going to get solved in 2018 is custody. Like who holds the Bitcoin? It's a beautiful idea to be your own bank, but if you're a prominent individual or if you're a fund or an institution, it's the last thing you want to do. So I think people are very scared of this. I think there's always the opportunity that you can hold your own coin if it comes to it, and that's what makes it different than our current financial system. However, I think for any individual, like if I'm putting any significant amount in, you bet it's going to a third-party custodian or going to a fund. I'm not figuring out how to hold on to it myself. The custody problem will get solved in 2018. Ledger has a big infrastructure that they're rolling out, enterprise grade. Coinbase made an announcement. There's a new company that I'm advising called Anchor. It's ex-Docker, ex-Square people who are really brilliant, hardworking, and very good security people. So I think you're going to see some really good third-party custody solutions, and there's a race on for that. So I wouldn't be surprised if by Q2 of next year you have very low-priced, or relatively low-priced, but very high-quality third-party custodians in the space, which will let you hold Bitcoin as a financial asset without having to hold it as a bearer asset where you're responsible for it.
Just one more question. Right here.
And about 2 questions. Sorry about that, Nick.
You forked it.
So I know Venezuela is going through a lot of turmoil. What would your recommendation be for the crypto community here to help the citizens in Venezuela? And the second question is, if Elon Musk wanted to do an ICO, would you support him?
I don't think Elon needs my support, nor does he need an ICO. Elon's figured out how to take money from the public markets very, very efficiently. So I don't think he needs to do an ICO. And I think the hype meter would go off the charts. You combine Elon and Tesla and ICO, and this is too much. In terms of Venezuela, the problem with Venezuela is inherently socialism. It's not something we cause. It's sort of like one more time, let's run the grand socialism experiment and see if we get any different results. And we always get the same results. So sorry for those of you who think it hasn't been tried enough, but it's been tried a lot. So I think the best thing we can do, I think the failure that we had, and it's not anyone's fault, but I just think the crypto community wasn't yet ready with easy to use end user tools that would make it as easy for an end user to transact in cryptocurrency as like an M-Pesa user might in Africa, for example. So we just still don't have easy enough to use wallets that let you send around, receive cryptocurrency, understand what that means in your current fiat context, get the money in and out. And the good news is those tools are now being very rapidly built. For example, the hardware wallets didn't exist a couple of years ago. The Bitcoin ATMs are sort of a recent thing. So I think that infrastructure finance layer, the financial infrastructure layer is being built out, and the faster that can be built out, the better. I mean, I think we may have missed this time with Venezuela, like that country's a disaster right now, unfortunately. So the best thing you can probably do is humanitarian, contribute coin. But I think the next Venezuela that happens, and there's always inevitably one, because there's always some kleptocracy or dictatorship or thugocracy that's melting down, we need to be ready by making sure that the financial infrastructure to transact in cryptocurrencies for the average end user is there and easy and stable. And to Asha's point earlier, like they're not scared of losing their Bitcoin, right? They have some sort of a backup or a multi-sig or recovery or those kinds of things.
Let's take one more question.
Okay.
Why
We'll do one
not?
more.
It seems that there is some interest. Okay.
Dmitry Alimov, Frontier Ventures. Naval, outside of financial services, which I understand you argued about, what applications that are blockchain based and that truly deserve to be on blockchain are you kind of most excited about? Name, let's say, 3 or 5.
Yeah.
Why? And explain why, please.
Yeah, what are the exciting applications outside of just pure financial? Well, I think anytime you're trying to organize a large network of humans to provide resources to each other, and especially if those resources are fungible in that, you providing it versus me providing it is sort of the same thing, and they're digitally on-chain verifiable. In other words, a protocol can test to make sure you provided it, as opposed to have to go talk to a judge or an external third party. I think those are the most interesting use cases. So one obvious example is file storage. There's all this disk space lying around. We have lots of excess file storage. And you could build a giant grid computer that's serving up files that's censorship proof. Essentially all the things the internet already does, like bandwidth, routing, file storage, CPU, those kinds of things, they're already out there on the internet. Everybody has a bit of these resources. We just want to contribute them together in some way, be able to keep track of them. So, of course, Filecoin and Seacoin and storage, and there's a bunch of other networks trying to do that. There's also kind of an edge bandwidth argument where we should all be hooking up Wi-Fi points and all be getting paid in Wi-Fi coin and paying each other in Wi-Fi coin to use Wi-Fi networks, and eventually replacing the Verizon, AT&T, T-Mobile oligopoly. So I think that could be an interesting use case. You could have a solar power network where we're basically putting energy into the grid and taking it back out of the grid and building a decentralized power network. Other examples, like if you had a very fast clearing coin or a microtransaction coin, you could use that in routers to basically give access to each other. It's the old hash cache vision of getting around denial of service attacks and having a payment for spam as an anti-spam measure. You could also have self-driving cars, so if Elon wants to drive the hype meter off the charts, Tesla's could exchange Tesla coin for rights away on the road, or for charging and those kinds of things in a decentralized manner. So I can pull up to a decentralized charger, pay in Tesla coin, charge my car, then pay another Tesla like a fraction of a cent to get out of the way so I can get to my destination faster. So I think there's lots of interesting things you could have happen anytime you have a network where the resources are provided by a large community of average anonymous people, and you can verify the transaction on-chain. So those are the criteria I would use.
You want to do one more? Well, thanks, Naval. Oh, do we have one?
There's one.
Okay.
Hi, it's Vita from Talking Bubbles. So, question, it says beyond 2018. When do governments get blockchain? Can you just foresee the future and see when the world changes? Really?
When do governments get blockchain? Well, it's a crazy concept. I don't think it's a question of when, it's a question of how they get blockchain. So one way of getting blockchain is saying, wow, this is the next generation of the internet. This is a brand new financial infrastructure and eventually internet infrastructure, and we want the innovation to happen here. And so we want to foster those entrepreneurs, we want to get those tax dollars, we want to get that innovation, we want to get that job creation. So that's one way to get it. And luckily the US is right now trending in that direction. Although all it would take is one terrorist attack where they claim it was financed by Bitcoin to turn that whole thing around. The other way to get it is to say, oh, this is a threat to my ability to print money. This is a threat to my ability to freeze transactions on people that I don't like. And that's would lead to shutting, or this is a threat to my ability to put in capital controls, and that leads to a crackdown. And I've said this before, and I'll say it again, but I think the key insight here is that code is just speech. Back in the 90s, they were trying, Bill Clinton's government was trying to ban the export of strong cryptography and saying that it's a munition. And at that time, I think it was Philip Zimmerman, I could be wrong, but he famously wore a t-shirt around that had the encryption algorithms on his t-shirt, like very compressed, very simple form. And he was making the point that code is just speech. You can't ban code without banning speech. And there's a reason why the First Amendment to the Bill of Rights is the First Amendment. It's the most important thing. It's the thing that all of our other freedoms rest upon. So in that sense, if you're into crypto, you should be a free speech absolutist. Because if they can shut down any speech, they're gonna come after your crypto next. So speech is just, code is just speech, and crypto is just code. It's just running code. You can shut down the ingress and the egress points from crypto to fiat and fiat to crypto, but you can't shut down crypto itself any more than you can shut down the internet. So I think fundamentally, money, code, and speech are the same thing. But the problem is we have all kinds of financial regulations that basically say, here's what you can and can't do with money. But we don't have the same level of speech regulations that say, here's what you can and can't do with speech. So I think governments are going to have to reconcile that. And the governments that choose well, I think, will be the home to the next reserve currency and the next financial infrastructure. And this one may be a winner-take-all infrastructure. It may not be the case that you have a Hong Kong and a London and a New York and a Singapore as financial centers. You may just only have one, which is the crypto financial center. Wherever that's happening is where it's going down. So I think we're going to end up in a scenario where some countries are not going to be able to reconcile this, and they're going to want to extend their control over money into control over speech, and those are going to be very repressive regimes, and that's kind of going to be the big boss to fight here, the final boss in the video game sense. You know, you can be your stage bosses, and then you get to the big one at the end. So this may be the final boss. And I think there are countries, hopefully, that will figure out, like, hey, this is a chance to have the home of financial innovation, next generation internet, and money all be within our shores, or mostly be our people, and I think those countries are going to do fantastically well. So I think that's really the question. It's not when governments figure it out, it's how they figure it out, how they interpret it, relative to kind of their morals and their norms and their society.
Awesome. Thanks, Naval. It's a fun chat.